Okay, so I can start now, right?
Hi, Alvin, you can start now.
Okay, great, thank you. Okay, hello everyone. Good evening. My name is Alvin Lee. So first of all, thank you, Tiger Brokers, for inviting us to host this session, and thank you all for joining it as well. So let me just give you a quick introduction about myself and the company. So UBS, I'm quite sure most of you have heard of it. It's a global bank, and then I am from Hong Kong and based in Hong Kong, and so tonight I would like to the product that I would like to introduce to you tonight is listed on the SGX, but most of them are about Hong Kong underlying stocks. So I hope all of you, most of you, do trade Hong Kong stocks, or do check out the prices, like on a regular basis, because the product that I would like to introduce to you tonight is a product that are linked to the Hong Kong stocks with a leverage that allows you to get either a bullish or bearish return, depending like on the type of the product. And first of all, about myself, my name is Alvin Lee, and I'm from the APAC Public Distribution Sales. So as I said, I'm from Hong Kong, so I'm actually responsible for both Hong Kong and Singapore listed products sales. So as some of you, I'm sure some of you do trade Hong Kong CBBCs and warrants. So Hong Kong warrants is actually the so basically, Hong Kong Exchange as a listed product, like a listing hub, is the turnover is the top in the world. So we have been doing warrants in Hong Kong for quite a while, and we actually just expanded to Singapore by launching this product called Daily Leverage Certificate on the SGX just past February. So we're still quite new on SGX, and so if there's any feedback about anything, right, about the product, about our pricing, please feel free to let us know. So we still want to know where we can improve. All right. So without further ado, so tonight's topic is about a overview of Hong Kong popular stocks, and how this product called Daily Leverage Certificate can help investor enhance the potential returns. Okay, and so a bit of disclaimer, and then all right, let's move to the next slide. And all right, so as you can see on screen, right, Hang Seng Index as the Hong Kong flagship index has been, okay, this is how the index has been doing in the past year, right? So I think most of you would agree that it's been quite bad, to be honest. So people have been saying that the sort of the easiest strategy to win, want money in the Hong Kong market is to buy a bearish product whenever it goes up, right? So I think if you look at the chart, you probably would agree as well. So this is the chart that I prepared last week. So today is 19th, right? So just 1 week ago, and then so in the past week, it hasn't been doing very well either. So there was a big rebound, when there were, when people in the market were talking about the fact that, the Shanghai, because of the COVID previously, there was a lockdown, but then it sort of, has started to resume normal. And also, people are talking about, the economic figures of China has not been very good. And that's why the Chinese government is going to do something to boost the economy, and that's what make the Hang Seng Index rebound the other day, around 2 days ago. But still, it's still I think today at close is still around 20,000 something, slightly above 20,000. So it's still at a compared to a year ago, which is when Hang Seng Index was at around 28,000, it's still down by a lot. Okay, so a lot of people who are just long stocks. So a lot of investors who are holding only the stocks, and if the stocks are, I think most of those, if it is Hong Kong stocks, have a positive correlation with the index, right? If you're holding only just the stocks, chances are you have lost quite a bit in the past year. So I think the product that I introduced tonight can help you. First of all, to make positive return when the market goes down, because there's a bearish product available. And also, I think even if you're holding stocks, you can also consider using the bearish type of product, or the bearish type of DLC to hedge against your holdings. All right. So this product, okay, let me go to this first. This product is called Daily Leverage Certificate. Okay. I think quite a few of you, if you have been trading Singapore, you probably have heard of this product as well, or you either have heard of it, or I'm sure some of you have been trading it already as well. So for those of you who have been trading it, you will notice that previously you only saw one issuer of the DLC. There has been only one until last February, where we joined the market. So hopefully in the future, whenever you pick a DLC, you would take a look at at who is the issuer as well, because as I will talk about later, issuer does make a difference in your return. Okay. Okay, let me move myself a bit to show the text. All right. Okay, so this product is called Daily Leverage Certificate. A very quick introduction about it is that so daily means that the product's leverage. Okay, so first of all, this is a leverage product. Okay, whenever the stock goes by a certain percentage, the DLC would go by like a multiple of that percentage. So that's how the leverage is reflected. And so daily means that this leverage is fixed on a daily basis. So for example, if you buy, say, a warrant, right, at a certain gearing, after a certain time, after the stock moves, or after some terms changes, the gearing would change as well. Or if you buy a stock on margin, and then the moment you enter the position, you have got that the gearing, and then after a while, after the stock moves, your gearing will also change. But this product is different. So this product's leverage is fixed every day. The fact that it's fixed every day doesn't mean it's fixed for the period that you invest in it. So meaning that, when you invest in a product, let's say today is 5 times, right? And then let's say today the stock has gone up by a lot. And, whenever the stock has gone up, your leverage, actually, you get the leverage when you got in, but then for those people who got in after the stock moves, the leverage will not be the same. The leverage, if the stock goes up, the leverage actually will be less. And what this DLC does is that every day at day end, there's a reset, the reset of a leverage back to the leverage factor that it is supposed to give you. So for example, let's say a 5 times long, so 5 times bullish product on the most popular Hong Kong stock, Tencent. I'm sure you know what Tencent is. So after the stock moves, and then at the end of the day, the leverage is reset back to 5 times. So the next day, so basically, no matter which day you buy the DLC, you will get 5 times leverage. Okay, but this 5 times leverage, if you hold the DLC for longer than 1 day, for longer than 2 days, for even longer period, then your overall leverage might be more or less than 5 times. And that would depend on where the underlying goes. That also depends on how it goes. Okay, so this is some product features that I would like to highlight about the DLC. And in terms of the second word, right, leverage, the leverage is fixed, and also L can also stand for long or short. So there are 2 types, namely long and short. So long DLC goes up whenever the stock goes up, and short DLC goes up whenever the stock goes down. Okay, so this is how the 2 types of DLCs work. And lastly, the name certificate actually implies that, first of all, the product, as a certificate, the certificate is issued by an issuer like us, UBS in this case, and the certificates are listed on the SGX, and we are the issuer, meaning that we also have an obligation to provide, to either appoint a market maker or be the market maker ourselves. So in this case, we are the market maker of the DLC, and we have an obligation to provide market making, meaning the bid and offer spread with quantity continuously whenever the stock is trading. So whenever the underlying stock, let's say Tencent or Alibaba or whatever is trading, we would need to provide market making. So some people might be wondering, might be asking, I check out your DLC on screen. I don't see a high value traded. I don't see a high turnover. That makes me not that confident in trading your DLC. But to be honest, of course, the higher the on-screen turnover, the better. But it cannot be the case if a product is newly listed. If we issue a new product, it takes time for investors to check it out, for them to understand the product before they trade the product. So it's very likely for a newly traded DLC to be having 0 on-screen turnover, right? But I think most important is that we as a market maker, we always have the obligation to provide the market making. So if when you buy from us, and then after you bought, the stock does go in your direction, it goes up. For example, you bought a long DLC, the stock goes up, and then our bid and offer will both go up, so that you will be able to sell it back to us at a higher price. Okay, that's how you make the profit, even if there's no other people trading with you. But obviously, most of the time you will find other people also trading the same DLC. So you buy the DLC. Sometimes you'll find that the counterparty is not UBS, it's someone else. It's because especially after a while, when a DLC is more popular, chances are some other investors will be trading the same DLC as you. Okay, so this will be the very quick introduction about the product. And let me just go back to this slide. So this is a quick, a brief overview of what happened to the Hong Kong market in the past month. Okay, so I've got the past month data and also got the month to day data. So it has not been very good in the past month, as well as year to date. But then, so this table has the top, how many? 1, 2, 3, 4, 5, around 13-ish DLC, stocks. So all these are Hong Kong stocks, right? And then sorted by descending daily turnover. So namely, like basically like how like the top, like the most liquid stocks. And obviously the top is Tencent, and then we've got the Meituan, Alibaba, JD.com, all the tech stocks, and then Kuaishou as well. So if you don't know what some of these companies do, you can check with us. We can give you a brief like an introduction as well. And then after that, you see insurance stock, AIA, and then followed by the Hong Kong Exchange itself, and then Ping An Insurance as well, and then BYD, like automobile sector, and then China Mobile, HSBC, and CNOOC is an oil stock, and then lastly is Xiaomi. Okay, so you can see that quite a few of them is tech stocks. So I think this is the case that happened in the past around, say, a few years, that basically nowadays the Hong Kong market is, I think I can use the word dominated by tech stocks. And some of the traditional sectors are still there, namely like banks, insurance. So HSBC, you still see it. China Mobile, you still see it. And then also the Hong Kong Exchange itself, you still see it, right? Okay, and many of them have not been doing well because, as some of you may know, like I think in the past more than a year, so the tech stocks, especially Chinese tech stocks, have been doing very, very badly because of, first of all, because of the regulation tightening, and also because of the fact that it's like a rate hike environment, which is by nature bad for tech stocks, especially stocks that are not making profit yet. And so I think that's the kind of the background why most of these, especially tech stocks, have not been doing very well. So if you look at the second last column, the change year to date, you can see that the China Mobile and also Cnoc are the only two stocks that went up year to date. So Cnoc obviously is because it is an oil stock, and it focuses quite a lot on the upstream business of oil production. So that's why this stock has a quite high correlation with the oil price itself. There are, okay, so at the moment, there are no products listed on the SGX that are directly linked to the oil futures yet. So, whenever people want to, get exposure on oil price, they would look at like some kind of substitute, for example, this stock. Okay, and this stock, obviously, because of the high correlation, you can see that it has been doing quite well year to date. And the second one is China Mobile, which has been providing quite decent return as well. And lastly, HSBC year to date is around flat. Okay, other than that, most other stocks, as you can see, is down. Okay, all right. So this is just a quick overview, and if we are to look at this graphically, you can see that Tencent, Baba, and then so Tencent is 700. Baba is the second one, which is 9988. The third one, 941, is China Mobile. I understand that maybe not all of you are familiar with the stock code. And so it's not, because it's not like Singapore or US where, you kind of can guess what it is by the taker. But in Hong Kong, it's all just numbers. So the fourth one, 5 Hong Kong, 5 HK is HSBC, and then the fifth one, 883, is the Cnoc, the oil stock. Last one is 388 Hong Kong Exchange. So in the chart, you can see that this year to date chart basically tells you that okay, at least year to date, right? Old economy has outperformed the new economy. Old economy, the top 3 lines, Cnoc and China Mobile and HSBC, have outperformed the other 3 stocks that are new economy, that are the tech stocks. Okay, So this basically just graphically what the table tells. All right. And okay, let's do a case study, right? So we don't know whether the tech stocks will continue to do very badly or will be able to rebound. Later on, I'll show a couple of charts. So some people in the market are talking about that the tech stocks are going to be able to rebound because of, as I mentioned, the Chinese government, would like to, boost the economy, all right, because of the bad, economic indicators. So, okay, this is the case study, right? This is what happened from 18th February to 15th March. There was a huge plunge in the stock price on the 15th of March when there was a rumor that all the Chinese ADRs listed in US will have to be delisted. All right. So that's on the 15th of March. And then just one day after, on the 16th, we saw news that the Chinese and the China and the US have agreed on certain, rules about, allowing the Chinese ADRs to continue to be listed in the US market. That's what led to the huge rebound. Okay, but we would like to focus on just the day before that. So from the 18th of February to 15 March, in just a month, Tencent plunged by 38%. So this stock price, the stock price itself, not to mention leverage product, the stock price itself already went down by 38%, which is huge. And then this is what happened on the price of a 5 times short DLC, okay, in the same period, of course. So the 5 times Tencent short DLC went up by 558% in the same period. Okay, so some of you may be wondering, right? Tencent is down by 38%, right? This is supposed to be a 5 times DLC. So if a product is to provide you with 5 times leverage, if the stock is down by around, say, 40%, so I bought a short DLC, right? 40 times 5 would be around 200, right? So why is the DLC not up by 200%, but much more than that? The DLC end up going up by 558%. And that is because of the, remember what I mentioned earlier? Their leverage is reset every day at the end. So if the stock continues to go in a trend, that would allow you to actually get more than 5 times leverage. So if the stock goes in a way, goes in a trend, in this case, it goes down, 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 and down, right? It doesn't have to be, every day down, but in this case, it's most of the time down, and then, maybe 1 or 2 days or 3 days going up, it's fine. So as you can see, it's a big trend that is going down. In this case, you will be able to get what we call compounding gain, and then you will get a much more than 5 times return, okay? And in the same period, let's say I was on the wrong direction, I bought a Tencent long instead. So Tencent long would have provided you with, obviously, like, you almost lost the entire DLC. That's for sure, because Tencent itself is down by 40%. And if you bought a 5 times long DLC, right, 40 times what will be, you'll be losing 200%. So that's another beauty of DLC. In this case, the DLC would not lose 100% of the value because of the compounding gain again. So in this case, it's also a compounding gain. It's just that the gain is in a sense that you lose less than 5 times. So for the whole period, even when the stock is down by 40%, your DLC only lost 93%. Okay, after this 2 case study, you may be wondering, right? What if I bought both? What if I bought both long DLC and short DLC in the beginning of the period by the same amount? You will be making a profit. So you go long and short at the same time, you will be making a profit. So this is, I would say, one of the beauty of DLC. But okay, I have to emphasize that this only happens when the stock goes in a trend. Okay, when there is this kind of big trend, you will be able to benefit by buying both long and short, because you will be able to get compounding gain from both DLCs. Okay, so this is kind of something I think would be interesting to share with you. Sometimes you don't even need to have a very strong view on certain direction. Your view can be on that the stock will go in a trend. If the stock goes in a trend, no matter it's up or down, you buy both, you will still be able to potentially make a positive return from the compounding. Okay, so this is I think one of the key features about DLC is called compounding effect. All right. Okay, so but the previous case tells you that it's what would have happened if you hold a DLC for a month, right? But DLC, because of the leverage nature, I would say most of the time people don't usually hold it for that long. Of course, you can do that. If you understand how compounding works, definitely you can hold it, for a long period of time. But I'm just saying that most people who trade DLC, usually they trade DLC, they either day trade a DLC, right? Obviously, they day trade a DLC. And some of them, they hold DLC for a couple of days, say maybe 4 to 5 days, like on a rough average. A small number of investors will hold it for longer period. For example, let's say a month. Okay, so that's our observation. And if you want to check out our product range, you can go to our website. I will show you the website later. But then, okay, for example, this is the product search page on the website. It's very easy to pick a DLC because you only need to check out the underlying. First of all, you obviously need to have a view on the underlying. And then you need to know whether you want to go long or you want to go short. And then lastly, basically, after you select the underlying and long or short, you'll find maybe one product, then you know that's the only product for you. Or sometimes you find more than one product, you find maybe 2 to 3 or 4 products. In those cases, you would want to go for the product with a highest sensitivity, meaning that you want for the same amount of movement in the stock, you want the DLC to tick up or tick down by more, right? Providing you more opportunities or more chances to get in and out throughout the day, right? So if you look at the last column sensitivity, this is basically how much movement in the stock, the stock price, would trigger one tick movement in the DLC. So in general, you want this number to be as small as possible, okay? But obviously, you will need to compare different DLCs of the same stock, all right? That is where, when the comparison makes sense. So you want this number to be as small as possible, because that means you require less movement in the stock to trigger the DLC to move by one tick. All right. Okay, so let's look at a few charts. So this is Hang Seng Index. I think we just covered already. So if you want to have a bullish view, you can consider this. The ticker is stock code is IFDW, but I think you don't need to check. You don't need to remember the ticker, because if you go to our website, you'll be able to find the products. Or sometimes if you go to the broker platform, for example, Tiger's platform, I'm sure you will find, basically the name of the DLC already tells you a lot of things. You will see that the name will be something like 7 times long, UB is us, the issuer. So you see the name is basically like HSI, 7 times long, UB, and then the expiry of the product. Okay. So you already know what it does, and so you don't even need to remember the ticker. I just mentioned that DLC has an expiry date. So just beware of it, and then don't buy a DLC that is like expires next week. Okay, and other than that, I think most of the time you'll be fine, because DLC is not like a warrant that for those of you who know warrants, right? Warrants as an because of the option nature, the time decay on the product will go faster and faster as the product goes near expiry. So as the product is closer to expiry, the time decay per day will also be higher. But for DLC, this holding cost is more like a linear holding cost. So the cost doesn't increase as the product goes closer to expiry. Okay. All right. So this is HSI, and then the next one is Tencent. So Tencent just announced its first quarter 2022 result just yesterday, and it was quite bad. And today it's down by 8%. Okay, so you will see a Tencent 5 times short DLC that's up by roughly 8 times 5, which is around 40% today. Obviously, on the long side, it's down by about this percentage as well. Okay, and then so let's look at another like sort of I would say stronger stock, China Mobile. Sorry, this is Cnoc. Because of the oil price, and I'm sure for those of you who follow like international like news and everything, like what happens between, for example, like Russia and Ukraine, you sort of would have a view on the oil price. So if you do, then Cnoc will be some stock that you can consider getting exposure. But okay, let me just emphasize this one more time. The underlying stocks are from Hong Kong, but then the DLCs themselves are listed on the SGX. Okay. All right. So this is China Mobile, and others sort of, it's doing relatively better than those tech stocks, put it this way. All right. I think recently in the past few days, you can see that the automobile sector, the auto sector has got a huge rebound, because people are talking about that if Chinese government would like to boost the economy, they would look at the auto sector first. And there has also been some policy announced as well to boost the production of the cars, and also the selling of it. So that's why in the past few days, you can see the entire auto sector has rebounded quite a lot. And for BYD, you can see that in the past 2 months, it has been quite boring. It has been going up and down, and then basically range bounding somewhere between 220 and 240-ish. Okay, and so the traction on it has been getting less and less until recently, that it rebounded hugely. At the moment, I think it's trading at around, let me just quickly double check. I think it has already rebounded to around 260-ish. Yeah, today is down just slightly after the big rebound. Today at close is already at 259. So as you can see, it already broke above the upper bound of the range. So it's already a breakout. Okay. So that's what happened on BYD. Because tonight I don't have a lot of time, but then I also would want to keep it short and punchy. So for some of the other features, I won't go into too much detail, because in my opinion, I think DLC is really a very simple product. So it's not like a warrant that has a time decay, and then the time decay also increases with time. And then when I buy a warrant, I also have to worry about how the implied volatility changes, right? It's not like that. So DLC, every day there's a fixed leverage. So obviously you have to understand how compounding works because it can affect the product return by quite a lot. But this one, Airbag Mechanism, I think you need to definitely know that there is such mechanism that exists in DLC, but this event doesn't happen that regularly. So how it works is that basically airbag is something that would be triggered if the underlying daily movement is too much. So for example, 5 times long and short DLC on stocks. And for example, here you can see that it's 15% in the table here. You can see that 15% for 5 times both long and short, meaning that, for example, you buy a long DLC on Tencent, right? If the stock today goes down by more than 15%, the airbag would be triggered on your long DLC. Okay, what happens on the short side? In this case, it will not happen on a short DLC. If the stock goes down, if you bought a short DLC, you'll be making, when the stock is down by 50%, you'll be making around 75% on the short DLC already. In this case, the airbag will not be triggered. It will not affect your short DLC. If the stock goes down by more, you make more on the short side. It's just on the long side, when your direction is wrong, this mechanism will be triggered. And then the DLC will be suspended for a period of time, which is usually around 45 minutes. And then after that, the DLC will resume trading. And then after it resumes trading, the exposure of the DLC will be reduced. It will be reduced in a sense that it will be referenced to the price that is determined in the period after the airbag is triggered. So instead of referencing the previous close, now it will be referencing a much lower stock price, meaning that your exposure will be reduced. So what happens after your exposure is reduced is, if the stock price continues to go down, the loss on the long DLC will also be reduced because your exposure is lower, right? And on the other hand, if the stock rebounds after the airbag, the DLC should go up in value after the rebound, but then this going up will be less than if there was no airbag, because just the entire exposure, no matter it's up or down, is reduced. Okay, so that's exactly why it's called airbag. So it's like sort of absorbs the pressure and then slows down everything. Okay, slows down what happens after that. So that's why it's called airbag. All right. But obviously, like for stock to move by 15%, daily movement is not something that happens every day, right? Although it did happen sometimes. For example, as I just mentioned, the 15th of March, when quite a lot of tech stocks just plunged, and airbag did happen that day. Okay, but most of the time, I think this is not something that you should be focusing on that much. I think you would want to focus more on how compounding effect works, and whether if your direction is on the wrong direction, whether you would want to just cut it off, whether you would like to just sell your DLC back to the issuer. Okay. All right. So I hope that is a introduction. I hope that was helpful for you to understand what DLC is and how it works, etc. We we'll be issuing more DLC. We will be market making on the DLCs, and at the same time, we'll also hope to provide you with useful information about the DLCs. So for those of you who would like to understand more, you can scan the QR code on this screen, and you can also go to this link, DLC. Okay, first of all, our website is dlc.ubs.com, and then okay, the link may be a little bit hard to type, like the entire link. So like /en/voucher/register. What we're doing now is a giveaway. It's a small giveaway to thank you for subscribing our newsletter. It's as a token of appreciation. So we'll be giving out Sing dollar $10 voucher, Grab voucher, for people who have successfully registered and also acknowledge the email. Okay, so you go to this QR code, you subscribe to the newsletter, and then you get a confirmation email. You need to click on the link to confirm that that is your email, and then you will receive the Grab voucher right away. And yeah, that's pretty much it. And so I would say that why not just subscribe it, and then if you don't find the information useful, you can always unsubscribe it afterwards, right? So I will just still put up this screen for maybe around 30 seconds to a minute for you to subscribe. And so in the newsletter, we will have a feature stock, a stock that we believe we believe that the market is looking at. And for example, if I were to send a newsletter today, it would definitely be Tencent, because after the result was much worse than the expectation, much worse than the consensus. And then also because of the fact that just last night, the US market plunged, right, as well. And then so Tencent is definitely going to be volatile today. And this is when there are chances for us to get in and out on either the long or the short. Okay, so there will be a feature stock section, and then there will also be a top 5 gainers and losers section, and then also like some other statistics that we think would be interesting. For example, like what underlyings that investors are looking at by looking at the DLC turnover, and also some other features. Okay, so if you're interested, please subscribe to this newsletter, and then we'll be sending out Grab voucher to you. All right, and also obviously the newsletter itself. Okay, so I think I would just like to go over just one more point. All right, because I think this has become more and more often lately, is the fact that you should avoid cheap DLCs. Okay, you may find more than one DLC. For example, for certain underlyings, say Alibaba long 5 times, you probably find more than one DLC, and then you'll be wondering, oh, which one is better? Remember, I said you should pick the one that is of a more sensitive. So basically, the one that has a smaller number of on the sensitivity column, right? So the other way to look at it is that because we see that quite a lot of investors, when they see a DLC that's a very low price, they would buy, because they thought, oh, previously it's like maybe $1 or something, now it's just 2 cents, so it's very cheap, right? So maybe I can consider buying it now. Also, another way to look at it is that this is a much cheaper DLC. I buy it with the same amount of capital, I can buy more shares, right? This is wrong concept for DLC. So please avoid this, because the DLC price, there's a fixed spread of the DLC, or you can say a fixed tick. So the DLC, if it is trading at a 0.005, when it goes up or down, it has to go up by a multiple of 0.001. Okay, so it either goes up all the way from 0.005 to 0.06, or from 0.05 down to 0.04. But the thing is, let's say this DLC is trading at 0.05. One bid and offer spread, let's say, which is 0.01, for this DLC is 20% already. So this 20% is huge. So even if the market maker is market making the tightest spread possible, which is 1 tick in this case, it still means 20% of the DLC price, which means 20% divided by 5, right? The leverage times, which means you would need 4% of the stock movement for this DLC to just move by 1 tick. Even if you bet on the right direction, the stock does go up by 4%, you will be just break even, right? And it's not that we can choose what the price of the DLC is at. We can only decide the listing price of the DLC, and after that, the stock can go anywhere. It can go up or down by a lot, right? So there must be one side of the DLC that loses quite a lot of value after a certain period of time. So this is what happened to this DLC. I think this is a Meituan DLC. Meituan went down by a lot, and that's why this DLC went down by a lot in price. So in this case, please avoid this DLC because the bid-ask spread is just too huge. And at the same time, if you go to our our webpage, you will find the sensitivity value of this DLC to be very high, which means that this DLC is highly insensitive. Okay. Okay. And then what if there's a DLC that is around 15 cents? In this case, it's much better. Even if the market maker is quoting 2 ticks, these 2 ticks is just 1.3%. Remember the previous example is 20%. Now it's just 1.3%. This 1.3% only requires around 26 bips movement in the stock to move it by 1 tick. And 10 cents in a day can most of the time like move by $10 to $25 easily, right? So meaning that in a day, you usually would have around, say, 10 to 25 ticks movement in the DLC, meaning there is a huge room for you to get in and out. So in this case, this one is a much better DLC than the previous one. All right. So that will be the end of my session tonight. And then I just would like to, first of all, share this website with you, dlc.ubs.com. And then if you would like to understand more about DLC, you can go to dlc.com, dlc.ubs.com. There's an education section that basically explains everything in detail, from compounding return to airbag mechanism to how costs and fees are charged to how the daily leverage works. Okay. And then if you have any questions, you call us, or if you don't want to call us, you can also send us email to this ol-sg-dlc@ubs.com. Okay. So let me just spend around 30 seconds to quickly share our website with you. All right. So let me just quickly open a browser window, and then sorry, 1 second. Yeah. So I think you can see that okay, this is the screen, right? This is the UBS dlc.ubs.com. So go check it out, and then also check out different pages and also products to see what products that we have. We've got a Meituan, Tencent, Alibaba, etc. All right, and then so if you want to get the $10 Grab voucher, please do not subscribe in this box. please go to the one that I just shared, okay? Because if you go to here, you will not get the $10 Grab voucher. All right, so let me just stop sharing the screen. Okay, that will be the end of my sharing tonight. I hope you learned something. If there's anything, there's any question, feel free to let us know. Call us anytime during market hours. We have a dedicated, team to answer hotline calls. Okay, thank you very much, and hope you have a good night. I'll see you. Bye-bye.